Have you ever pondered the idea of starting an investment journey? Maybe you've dreamt of earning passive income, or perhaps you're keen on securing your financial future. Well, today, we're delving deep into the world of investing, breaking it down to the very basics, and guiding you on the vital steps to take when starting your investment journey. Firstly, it's essential to grasp what investing actually means. Investing, in its simplest form, is the act of allocating resources, typically money, with the expectation of generating an income or profit. You're putting your money to work so that you can reap more money in the future. Now, to start investing, you must first understand the financial markets. Essentially, financial markets are like huge global auctions where securities like stocks, bonds, and commodities are bought and sold. These markets are critical to the overall economy, facilitating the flow of funds from those who have excess money to those who need money. The first step in your investment journey is to set clear, achievable financial goals. Ask yourself, why am I investing? Maybe you're saving for retirement, a new home, or your child's education. Having a clear goal will guide your investment decisions and help you choose the right financial instruments. Next, you need to understand the different types of financial instruments. Stocks represent ownership in a company and can offer high rewards but come with higher risks. Bonds are loans you give to governments or corporations, and they pay you back with interest. They're generally safer but offer lower returns. Mutual funds are a mixture of stocks, bonds, and other securities managed by professionals. Each of these instruments carries its own set of risks and returns, so choose wisely based on your financial goals and risk tolerance. After understanding the financial markets and instruments, it's time to create a diversified portfolio. Diversification means spreading your investments across various financial instruments to minimize risk. It's like the old saying, don't put all your eggs in one basket. Then comes the crucial step of regularly reviewing and adjusting your portfolio. The financial market is dynamic, and your portfolio needs to adapt to these changes. Be sure to monitor your investments and make adjustments as needed to keep your portfolio aligned with your financial goals. Lastly, remember the golden rule of investing: invest for the long term. While it's tempting to chase quick profits, investing is a marathon, not a sprint. Patience and discipline are key to successful investing. In summary, starting your investment journey involves understanding the financial markets, setting clear financial goals, understanding the different types of financial instruments, creating a diversified portfolio, regularly reviewing and adjusting your portfolio, and investing for the long term. Remember, every investor started somewhere, and it's never too late to begin your journey towards financial freedom.